10 seconds, 5 seconds. The Employee State Insurance Act 1948 is a piece of social welfare legislation enacted primarily with the object of providing certain benefits to employees in case of sickness, maternity, and employment injury, and also to make provision for certain other matters incidental thereto. The Act in fact tries to attain the goal of socio-economic justice enshrined in the directive principles of state policy under Part 4 of our Constitution, in particular Articles 41, 42 and 43, which enjoin the state to make effective provision for securing the right to work, to education and public assistance in cases of unemployment, old age, sickness and disablement. The Act strives to materialize these aboved objects through only to a limited extent. This Act becomes a wider spectrum than Factory Act, in the sense that while the Factory Act concerns with the health, safety, welfare, leave, etc. of the workers employed in the factory premises only, but the benefits of this Act extend to employees whether working inside the factory or establishment or elsewhere, or they are directly employed by the principal employee or through an intermediate agency. If the employment is incidental or in connection with the factory or establishment. The Employee State Insurance Act was promulgated by the Parliament of India in the year 1948. To begin with, the ESIC scheme was initially launched on 2nd February 1952 at just two industrial centers in the country, namely Kanpur and Delhi, with a total coverage of about 1.20 lakh workers. Thereafter, the scheme was implemented in a phased manner across the country with the active involvement of the state government. The monthly wage limit for coverage under the ESI Act would be such as prescribed by the central government in the ESI rules 1950. The existing wage ceiling for coverage excluding remuneration for overtime work is rupees 6,500 per month. An employee who is covered at the beginning of a contribution period shall continue to remain covered till the end of that contribution period, notwithstanding the fact that his wages may exceed the prescribed wage ceiling at any time after the commencement of that contribution period. Wage ceiling for purpose of coverage is revised from time to time by the central government on the specific recommendation of the corporation. At present, the corporation has recommended for the increase of the wage limit to rupees 10,000 and its implementation is awaited. An insured person or his dependents shall not be entitled to receive or recover, whether from the employer or any other person, any compensation or damages under the Workmen's Compensation Act or Provident Fund Act or any other law for the time being in force in respect of an employment injury sustained by the insured person as an employee under this act. If there is any change in the Provident Fund Act, it does not affect the ESIC Act. The difference between employee and insured person is that employee is the person who makes the contribution to the scheme and get benefits, and IPs may or may not be the contributors to the scheme but are entitled to the benefits by virtue of earlier contribution or insured employment. With the implementation of ESI scheme at just two industrial centers in 1952, namely Kanpur and Delhi, there was no looking back since then in terms of its geographic reach and demographic coverage. Keeping pace with the process of industrialization, the scheme today stands implemented at over 679 centers in 25 states and union territories. The Act now applies to 230,000 factories and establishments across the country, benefiting about 8.30 million family units of workers in the wage brackets. As of now, the total beneficiary population stands at about 32 million. The comprehensive and well-designed social security program is administered by an apex corporate body called the Employee State Insurance Corporation. It comprises members representing vital interest groups that include employee, employers, the central and state government, besides representatives of parliament and medical profession. The corporation is headed by the Union Minister of Labour as its chairman, whereas the Director General appointed by the central government functions as its chief executive officer. A standing committee constituted from amongst the members of the corporation acts as an executive body. The Medical Benefit Council, constituted by the central government, is yet another statutory body that advises the corporation on matters related to effective delivery services to the beneficiary population. The corporation, with its central headquarters at New Delhi, operates through a network of 26 regional and sub-regional offices located in various states. The respective state governments take care of the administration of medical benefit. Except in case of Delhi and Noida, Greater Noida, areas of Uttar Pradesh, where the corporation administers medical facilities directly. Like most of the social security schemes the world over, ESI scheme is a self-financing health insurance scheme.